I'm joined by Antoinette. Antoinette, this is a baptism of fire. So today is Thursday. The day we're recording today is Thursday. You started with Prosperous on Monday.
Yeah.
Yeah. You couldn't really say no when I asked you yesterday if you do this, could you?
Yeah, no, you pretended like it was a choice.
I got to be honest, you were down in the diary to come in here on Monday morning at 10 o'clock. And we said we can't do it to her on their very, very first day.
Thanks,
so you've come in
it.
as mortgage manager, and just to explain to people without getting into too much detail about Prosperous, I did mortgages up until 2018, then I stopped. And there was a couple of reasons why I stopped. And we are right back into it. And you are responsible for delivering the mortgages for customers and clients of Prosperous.
That's
new
me,
and
yeah.
old.
Yeah, looking forward to it. Yeah, getting into the new year now. So it's mortgages my background. So looking forward to bringing something new and fresh to Prosperous.
Yeah. Back to the old days.
Yeah.
The reason why I wanted to talk to you today is because today's episode is all about mortgages. And we can all look it up on Google and look at the rules and see this is how much I'm allowed to get 4 times or 3.5 times as a second time buyer. I need a 10% deposit. We all can see what the rules are. But what I want to do is get under the bonnet a little bit. And I think the easiest way of getting under the bonnet is there's 2 questions I'm going to ask you and I really want to focus on in the next few minutes. And they are, how does someone get an exemption? Okay. And secondly, what's the worst mistake? And we'll come back to that one. What's the worst mistake you've seen people make, or what's the one that catches people out all the time and something maybe that people don't realise is a problem? And there's a few out there that I'm aware of, but let's see if you've got something fresh or something new that I haven't come across.
Okay.
So, first of all, an exemption, for people who don't know, the central bank rules say you can get 4 times your salary as a first-time buyer. Second-time buyer, 3.5 times your salary.
Yeah.
You need to have a 10% deposit, and whether you're first or second time buyer.
That's right.
And those 2 rules apply to 85% of the cases that the banks do.
That's right.
But in 15% of the cases, they can break those central bank rules and they can kind of go off piste a little bit and do what they need to do. I kind of always summarise it as it's always the best boys and girls in the class get an exemption. But what is it? Is there rules and is there maths and is there kind of a criteria that allows you to figure that out?
Yeah, there's a bit of everything and different lenders will have different rules and different criteria. So, we know the 4 times your gross annual salary. We know that's one rule, and we know the 90% loan to value is the other. So the exception or the exemption comes in when you go outside of those 2 rules. So, for example, you have a couple earning 100,000 joint combined salary. Under the rules, they qualify for a mortgage of 400,000, with an exception on the loan to income. So that's that 4 times. With an exception on that rule, you can potentially go above that 4 times gross annual salary rule. And the bank might say, well, instead of you showing us that you can repay 100% of the current mortgage repayment, you need to show us that you can repay in the last 6 months, prove to us that you've been able to repay 1.3 times what the repayment is. So,
just to give an example of that, so you're talking about if they calculate that the mortgage repayment is €1,000 a month, you need to show that you can afford €1,300 a month with that calculation.
And prove it in the previous 6 months. And that 6 months is really the Bible,
And how do you prove that?
So it can be a combination of your rent or your savings or a discontinuing loan. So if you actually had a loan that's going to finish and you've maybe saved, so if you got a loan for 500 and you're saving 1,000 and that loan is going to be finished when you draw down your mortgage, you've proven then that you can take on a monthly repayment of 1,500.
So it could be rent, savings, or a loan that's about to disappear, or a combination of all of those 3.
Yeah,
okay,
absolutely.
And it's not always 1.3 times, though. Sure it isn't, and it's not always the same rules. The rules can change from a day-to-day basis,
day to day, bank to bank.
Branch to branch.
Yeah. So in some scenarios, lenders will have with that 15% that they're allowed to do as exception. Some lenders will have a limit on. So maybe if you went into a branch today of your bank, your high street bank, that branch might be able to grant you the exception or get you the approval for that exception. You could go to the same bank, different branch down the road, and they wouldn't have that.
Because they've used them all up.
They've used them all up, or they haven't done enough business maybe with their mortgage team. Similarly with brokers, you might have that scenario. They haven't done enough business, or they've used up all their exceptional allowances.
Okay. And the interesting thing though is sometimes the bank as a whole have decided, okay, we've used up most of ours as a bank, and then they just up it from, instead of 1.3 times, we need 1.6 times, or we need even more than that again.
Yeah, so we've seen that, and in the last year when the rules changed with the central bank guidelines going from 3.5 times your annual salary to 4 times, some of the banks decided that they would make it even stricter to be able to qualify for an exception, or some of them have also just said we're not doing exceptions as a blanket rule.
Just won't full stop.
Some lenders don't do them at all.
And are they saying they're at the moment?
At the moment, yeah. And again, that could change, and it's kind of a moving target throughout the year.
I find that really interesting because, so just to give people a little bit of backstory, up until October 22, wasn't it? It was 3.5 times for first-time buyers, maximum 3.5 times the combined salary or your own salary if you're applying by yourself, and it moved to 4 times. For both first-time buyers and second-time buyers, moved to 4 times.
Second-time buyers is 3.5 times.
It's the 10% that stays the same. Yeah, so 3.5 and the 4. So they moved up to 4 for first-time buyers. And I remember I discovered for the very first time, when they used to give exceptions, they'd go up to 4.5 times. So they go for a first-time buyer, they're going from 3.5 to 4.5, and that was the exception. And I actually asked the central bank at the time, what's going to happen to 4.5? If you're moving from 3.5 to 4 for first-time buyers, does that mean the 4.5 is going to move to 5 for first-time buyers? And they said, well, actually, the 4.5 has nothing to do with us. That's just that's the banks themselves that decide to do that.
Yeah, they've built in this 15% where the banks or the lenders can go outside of their policy or their rules, but they haven't put a limit. They haven't said you can only go up as far as 4.5 times if you're doing it as an exception.
But all the banks did that together, and they all more or less stuck to the same rule.
Pretty much, yeah. I mean, there probably are cases that they've gone above the 4.5 times, but every box.
They weren't advertising that though. Sure, they weren't.
No, certainly not. Certainly not.
What about where things trip people up? Like, what things have you seen where you kind of go, this case looks all right, and then you see something in the statements, or you see something and you just go, oh no, there's going to be a lot of explaining to be done here.
So the simplest ones are misdirect debits,
right?
And it might be just to your savings account. It might be something that you don't think is that important. I haven't missed my loans. I haven't missed my rent.
I remember years ago having a fella, he was denied his mortgage. Everything looked great, but he missed his health insurance contribution. Yeah. And he was like, it's just my health insurance. I don't even have to have that. And
sometimes they're just looking for an excuse to say no.
Yeah.
But there is that question, you've committed to paying this. This is, why are you not meeting your obligation or something that you've agreed to do? And even if it is only transfers between your accounts, it just doesn't look good. Don't like to see things bouncing on your statements.
Tell me about betting, because I always talk about betting, and my attitude is against kind of echoing what you're saying. It's not that you're guaranteed to not get your mortgage if you've got betting account going out of it, but it's giving them an excuse if they want to say no.
Sure, if there's another maybe reason, or it's a borderline case maybe. But I think, if it's a regular feature, if it's impacting anything else, if it's impacting your ability to repay in any shape or form, it's going to be seen as a negative. It's going to be seen as a red flag. It's okay to have, it's okay to see Paddy Power on a statement, or, lottery or whatever it might be. But, it's being sensible about it,
Okay.
You're not relying on it as a source of income. And it's not something that is stretching the account in any shape or form.
Or it's a source of income. It's a good one, actually, isn't it?
Yeah, let's not do that.
Of course I can pay for the bread and milk. And what about, have you ever come across a case where you looked at it and you said, you know what, the credit history here is just really, really bad, and I'm really going to have to put everything into this to get it across the line, and I'm hoping you're going to give me a good news story?
Yeah, I mean, I definitely have had cases that that you really have to pull on every avenue, in terms of proving that somebody has turned a corner, or that was a blip, or it was a mistake. It's really about explaining what happened, and how that's not going to happen.
And putting your
again.
hand up front.
And I would say absolutely that's key. If you're dealing with a broker, particularly, lay your cards on the table. The broker will help you through it. And will give you guidance as to how we can get beyond. It might be that you have to wait 6 months. It might be that you have to wait another 1
Year,
or 2
yeah.
years. But if it's doable at all, your broker will be able to guide you through that. I've definitely had cases where, particularly, we had the massive crash around 2007, 2008. That time, it really, a lot of people were affected in terms of their credit record and their central bank, central credit register record. We're well out of that now, but there is still some people who have maybe
That financial hangover.
hangovers. Yeah.
Yeah. Okay.
So it's explaining that, and I've been on the other side of it where we have gotten those cases across the line.
Okay.
So it's
Okay.
I think dealing with a good broker and being open.
I think
and
that's a
honest
good
about what
point.
happened.
And I'm talking about, this isn't just about Prosperous. I'm talking about brokers in general. Like people sometimes, why would I go to a broker? Sure, I know what the cheapest rate is. The difference for me is you walk into a broker, you walk into all the banks, you walk into a bank, you walk into a bank. But you've just touched on something else there, which is, look, you can be dealing with a bank and someone in a branch in a bank. And yes, absolutely, they're holding your hand through the process. But I think if you're dealing with a good broker, you are actually both sitting on the same side of the desk together, applying for the mortgage together. And that's the difference. You're in it together. And the person in the branch may well be absolutely helping you, and they may be brilliant and they may explain everything. I'm not taking away from that. But what I'm saying is they work for the bank that's giving you this mortgage.
Absolutely.
And they know who's paying them, right? They know what name is on their payslip at the end of the month. I'm not saying they're not doing a good job. I'm just saying it's a different relationship. And that's important.
And I've been in both of those situations, so working for a bank and as a broker. So, you always have your client's best interest at heart. But you're right. You don't have all the options open to you when you're working for one bank as a mortgage advisor.
Yeah. It's interesting. I pulled out of the mortgage market in 2018 as a broker because one of the things it's very much a relationship killer. It can really destroy it. It wasn't my area of expertise. It wasn't Prosperous areas of expertise. And I always felt, you know what, if someone's going to look for a mortgage, I'm not sure we're best placed to be giving them the advice. That's why I'm really excited about you coming in, because you're bringing the expertise in, you're bringing the experience in. You've got a big task ahead of you.
Yeah.
Do you love it?
I do. Yeah, I mean, I've been doing it for so long now, but I love it. I love that it is a relationship builder. And it's a journey. So I like the process of beginning, middle, and end of something, but also that you've built a relationship. You've built something that you can be very proud of when somebody's getting the keys to their house, and most of any business that I do is from word of mouth, is people telling other people about me. So I think that's great, and it's a great, it's a feel good factor for me. So yeah, I want to do a good job, and it's definitely something that I love. Yeah,
it's a calling. Yeah. You know what? Amanda was in a few minutes ago doing the Q&A, and she'll be delighted with that plug for the Prosperous new mortgage offering. We're going to get away with it. You know what? It's my podcast.
Yes, you're right.
Hashtag ad, hashtag own brand. But no, Antoinette, thanks a million for being here today. Thanks for your insight. And you know what? Best of luck with your career in Prosperous.
Thanks. You're very welcome. Looking forward to it.